Now we're talking of natural support and resistance. When we say natural support and resistance, it doesn't mean God created it. That's not what it means. It's called natural support and resistance because these are support and resistance levels that were derived through price action. Price itself created those resistance, those support and resistance levels. That's why we call them natural support and resistance levels. Now, we spoke of the yearly highs and lows. When I say highs and lows, the high is resistance and the lows are support. So I don't have to keep saying support and resistance. If I say high, you know I'm talking of resistance. If I say low, you know I'm talking of support. So we learned how to identify the yearly highs and lows. Now, for those of you in the group who are asking me how to have these vertical lines on your chart, in any case, they are called period separators. Let me show you how you can add them to your chart. First of all, let me take them off, then I'll add them again. You can see that those vertical lines are off now. So this is how you add them. When you come to your main chart, you right click, then you click on properties. When you come over here, we have colors and then we have common. You come to common, then you come over here, show period separators. You take that box, then you click OK. So they have been added. These separators will help you identify the range. So they are very important. You have to add them to your chart. They will help you identify your range. So we spoke of the yearly highs and lows, monthly highs and lows, weekly highs and lows, daily highs and lows, and session highs and lows. Now, like I told you, because like I told you, the yearly highs and lows, the yearly cycle is too big a time frame for you. It is a very slow process. So those time frames are usually used by the big institutions. So it's too big. If you want to know the yearly highs and lows, like I explained in the other webinar, you have to switch to the monthly time frame. From one period separator to the other is 1 year. Or you switch to the weekly time frame, and also from one period separator is 1 year. We already did this, so I'm just going over it. Then if you want the monthly cycle, you go to the daily time frame. On the daily time frame, from one period separator to the other is what? 1 month. From one period separator to the other is 1 month. The period separators are these dotted vertical lines you are seeing. Then the weekly cycle is on the 4-hour chart. From one period separator to the other is 1 week. So this week's price action is still forming. This was last week, and this was the week before. Now, for the daily cycle, you go to either 1 hour or 15 minutes. I don't use a 30-minute time frame, so we are not going to talk about it. I use a 1 hour and the 15 minutes when I want to trade the daily cycle. But I prefer the 15 minutes because things are much clearer over there. So on the 1 hour time frame, from one period separator to the other is 1 day. And on the 15-minute time frame, from one period separator to the other is also 1 day. It's also 1 day. So I was telling you, I have been trading this for quite some time now. So by just looking at this raw chart, I can tell you where the sessions are. You know, we spoke of the sessions. I said, generally speaking, there are 5 sessions: Asia, New Zealand session, Australia session, London session, and New York session. But looking at the market from the interbank perspective, the New Zealand session and the Australian session are not very relevant. Market makers base their price action around 3 sessions, which is the Asia session, the London session, and the New York session. So they are those we are going to be looking at. So by just looking at it, I can tell that this is the Asia session over here. This is the London session, and this is the New York session. But because it is new to you, I have an indicator. I shared it on the platform, and I asked you to add it to your MT4. It will help you identify the sessions. Now, let me quickly show you how to add it to your MT4. Once you download it from your Telegram platform and you copy it onto your laptop or your desktop or whatever, you copy it from wherever you have kept it on your laptop. It could be on your desktop or in a folder somewhere. First of all, you copy it, then you open your MT4 platform. When you open your MT4 platform, by then you have already copied the indicator. So after copying it, like I said, you go to File, then you go to Open Data Folder, then it will bring you over here, then you click on MQL4. When you click on MQL4, you have these files over folders over here. Click on the indicators folder. Now, these are a list of custom indicators on my chart. So what you want to do when you come here is you come to this blank space, then you right click, then you click on paste. Once you click on paste, the indicator will be added to your list of indicators. So what do you do next? You go to, so let's continue. So like I was saying, you go back to your MT4 platform. I'm going back there. So when you come back here, this is what you do. When you come back here, you click on this icon with the, what color is this? Yellow. This icon with the yellow folder and the yellow star. Click on it. Then you come over here. You see they've written indicators. What you want to do is you place your cursor on the indicators. Then you right click. Then you click on refresh. Once you click on refresh, the indicator you have added will come and be part of your list of custom indicators here. These are custom indicators. They are not inbuilt. I explained that in one of our earlier webinars. So once it's added over here, you will see it appear this way. This is the indicator I shared on the group, SM work time V1.5B. So you click on it, then you drag it onto your main chart, drop it there, and then click OK. You see, boxes have been added. Now, the purpose of the boxes is to show you the sessions. This box, please, those who are asking for the link, it's about to be dropped. Someone is asking, please, this indicator is for only MT4. It won't work on MT5. We have MT4 on our platform, so please download it. It makes things very simple for you. It's for only MT4, it won't work on MT5. So this box you are looking at, okay? This box you are looking at is the Asia session box. I hope you can all see it. Asia session box. Like I was telling you in our previous webinar, the Asia session, according to the market makers timetable, officially opens at 11 p.m. It opens at 11 p.m. Then it closes at 6, is it either 6 or 6 a.m.? Yes, it closes at 6 a.m. No, it closes at 7 a.m. Then when it closes, the London session also opens. Sometimes there's even an overlap. You find that one session is still in session, then a new session also opens. Then eventually the previous session will close. Then the new session will continue. So this is the Asia session box. This box over here, I think it's a sea blue color or whatever color it is. It's sea blue. And the candlesticks you are seeing right from here to the top, between this box and this box, is London session. Let me demarcate it so you see what I'm talking about. This is what I'm talking about. This is London session. This is London session. Then New York starts from here and enters into this box. We are still in New York just closed. New York closes at 8 p.m. according to the market makers calendar. So right now, if we were to go by the general knowledge out there, which is a 5 sessions, we will now say that we are in New Zealand session, New Zealand and Australia session. But like I said, those sessions are not very relevant, so we'll not be talking about them. We'll not be talking about them. Very good. So let me show you. We analyzed GBP USD, and I told you it was going to go up. Now, I told you the dollar was going to be weak. But then on Monday, I also updated you in the group, and I told you that we are likely to see dollar strength on Tuesday. And on Tuesday, indeed, the dollar was strong. It was just retracing. So I told you to be careful with the setups. If you remember, I made mention of it in the group that the dollar was going to be strong on Tuesday. And on Tuesday, it was strong. So this box over here is today's box. This is Wednesday. From here to here, this vertical line to this vertical line is Wednesday. This was yesterday, Tuesday. This was Monday, okay? And this was last week, Friday. So look, this is the trade I was talking about, the GBP USD. Now, I have already taught you how to identify the daily highs and lows, but let me take it again. As far as today's price action is concerned, this is today's cycle. From here, this vertical line to this vertical line. So if you want to know today's trading range, when we say trading range, we are looking at the market as far as the daily cycle is concerned, from the highest point to the lowest point, or from the lowest point to the highest point, depending on whether the market is bearish or bullish. So as far as today's price action is concerned, this is the daily range. This is the highest price went today. And that was during the London session. So we place a horizontal line over there like this. And this is the lowest it went. This was the New York reversal over here. So this is today's trading range. You see, from this low to this high. Before you can trade a daily cycle, first of all, you have to become really, really good at identifying the daily range. And by identifying the daily range, you have to know the highs and the lows. And it's very, very easy when you switch to the 15-minute time frame. When you come here, after you've added your period separators, from one vertical line, these are the period separators, the vertical lines. From this one to this one is 1 day. So what you are seeing here is today, Wednesday's price action. So as far as today is concerned, this pair, GBP USD, has been trading between 1.30050 and then 1.30677. So let me go back there. So like I said, this is Wednesday, this is Tuesday, this is Monday, and this is Friday. So assuming you were coming to trade the daily cycle on Monday, knowing the trend, GBP USD, though it is dropping now, long term is still bullish. It is only dropping because it has run into intermediate term resistance. There was a break in market structure on the daily time frame. It has to come back to test that break in market structure, and that break in market structure will act as support before it continues its bullishness. So we will see some drop in GBP USD, which is a retracement, but long term it is still bullish. So as we analyzed on Sunday, GBP USD was what? Bullish. So if I wanted to trade the daily cycle, I already know that the market is what? Bullish. So how would I have done my analysis? I would have used the previous week's low, because it's a bullish market. So I'm interested in the low, which is support, the previous day's low, which happens to be last week, Friday. You know, the market closes on Friday, 9 p.m., then opens on Sunday, but we'll consider Sunday's opening as Monday. So I would have, knowing that the market is bullish for this pair, this would have been my reference point, because that was Friday's low. Look, this box was Friday's price action. That was Friday's low. Now, this pair, GBP USD, take note of it. Because of the presence of the dollar in this pair, we usually see its true intention during the New York session. So one is Asia, you have no business trading GBP USD. When it's London, you have no business trading GBP USD. I will explain this into detail when we get to time and price analysis. It's not all the time you have to be in the market. There are certain times you shouldn't be in the market. You should be out. There are certain times when you should be in the market. So this thing happened during a time we call the New York kill zone. It's a kill zone because that's the time you see the true intention of the market. So you enter at that time, at that point, like a sniper. Then you get out after some hours. I will show you exactly when you should be getting out. So this would have been my point of interest, which is the lowest point, the previous day's low, which was last week Friday's low. Where else would I have looked at to find my range? This is my range. Now we analyze the chart from left to right. We don't analyze the chart from left to left. So once I have found my low, I'm now looking for my intraday high. Now, where is my intraday high? And I'm telling you, this pair, you see its true intention during New York. So you have to wait for Asia session and you have to wait for London session to be over. So we would have been looking for our high between the Asia session and the London session. Now, this is the Asia box. So this was the highest price went during Asia. But then during London, it went higher than it did during Asia. So this was our high as far as the London session was concerned. So this would have been our range. We would have drawn our low, Friday's low, then our high would have been London high, right here. So how would we have known exactly where to enter? This is natural support and resistance. But in order to know exactly where to enter, we would have used implied support and resistance. Remember what I mentioned on Friday's webinar. I said we have natural support and resistance and implied support and resistance. So we have identified the range using natural support and resistance. Then now we would have used implied support and resistance in order to get a good entry. So I will show you Fibonacci and I'll explain to you how Fibonacci works. Now, some of you already trade, and I believe some of you already know what Fibonacci is. But once I plot it, you realize that it is not the ordinary Fibonacci you know. The settings are different. This one is